So welcome to Game Plan Sunday, the first Game Plan Sunday of the year 2021. Today is January the 3rd, 2021. So we kicked off the year. I hit you guys with a nice little video of just, congratulating everyone who made it. We all made it, so we're here. It was a challenging year, but we definitely made a lot of progress. And so there's a video. If you haven't saw the video, let me see. I think I posted it right here. There we go. This is the video right here. So make sure you guys check that out. If you already haven't seen it, it's on the website. And it's just going over a lot of the things, the accomplishments that we were able to achieve for the year 2020. And, again, I was super, super busy. And I just wanted to reflect on some of the things that we were able to accomplish. So some of you guys been here for some years, and you've seen a lot of the progress. So this is a big deal for me. And so anyway, I just thought that I would just put something together for you guys to check it out. So make sure you check it out live on the website. Also, what we did is I kicked off the year with congratulating you guys for your analysis of what would be, your forecasting of what would be the best performing sector of 2020. And so this is a post right here. You guys can see it time stamped and everything, December 31st of 2019. And I just asked you guys, hey, which sector do you think will be the best performing sector 2020? And as you can see, majority of you guys chose the technology sector. All right. So majority of you guys actually got it right. All right. So, there's really no right or wrong answer because nobody knows what it will be. But, I was excited that you guys actually participated in it. And your forecast, your predictions came into fruition. So, I think that was pretty dope. So again, sending a shout out to you guys to acknowledge that. And I think we had Mia on there. We had Justin, we had Terry, we had Ron, we had Dustin. All you guys got it right. So there was a lot more. But just taking a look here at the sectors, this was, pretty much like the close of the year, how they perform. And you see the sectors that were best performing was the technology sector. Okay. All right, boom. So we had technology that was running it. We had consumer discretionary, and then we also had communications, the communication sector. All right, so those are like the top three performing sectors of 2020. And what can we learn from that? 2020 was definitely a crazy, crazy year. In 2019, we were able to forecast a coming recession based off of all the data that we collected over that year from the top of 2019. You guys know we were already curious about it. And then once the stars came into alignment, I wrote the article and we made our prediction and it actually came true. Didn't know it was going to be COVID. It didn't matter what the catalyst was going to be. Collapse is going to have to happen at that point. But the fact that the government went ahead and basically, brought it on much quicker. I guess they thought they could bring it on quicker. They can get us out quicker. And that's kind of like what we're kind of seeing somewhat, but not quite accurately though. But with the lockdowns and everything from, the pandemic, as I call it, we could see that a lot of companies were hurt and some companies were blessed. Some industries were more blessed than others. And this is because of the demand that they create, right? And the supply chain shocks and things like that. So anyway, we have a very distorted economy. So, forecasting things like that, no matter how much expertise you have, many people just won't get it right. But anyway, just taking a look at what we saw that did benefit from these lockdowns were these here. And so going into 2021, I believe that we will see more of the same. Now, the worst performance sectors, as you guys can see, was energy and financials. Okay. Which that doesn't really surprise me. When you have banks that make their money by investing their money, and they invested in safe bets like bonds, and bonds, again, completely manipulated. Oil, the reason why they're saying that we're not seeing inflation is because of oil, energy, oil prices being so low. And a lot of these energy companies, we talked about it anyway. When we actually looked at the market, when COVID hit, the market didn't crash when COVID hit. The market actually crashed from oil. Okay, so when the whole oil debacle came through, that's when the markets actually crashed. So you definitely got to pay attention to that. But the key that they want to do is try to keep it suppressed. They want to keep it low because as that increases, inflation increases because those costs get passed on to consumers from anybody who's paying, increased costs and delivering things. Everything that we order from Amazon or whatever, it's got to get delivered to you. So fuel must be consumed. And so, that's what we're looking at here. And so you didn't want to be in those names, basically. That was 2021. All right. Let's see what else we got here. All right. So yeah, and then I put this together right here on Thinkorswim so you guys can actually see it all lined up. Tech, consumer discretionary, and then communications, and then materials. Those are the top performing. And then you got the stocks right here, S&P 500. So all of these are the ones that outperform the S&P 500. And the rest of these underperform, basically. And energy way down here at the bottom. You do not want to be there. So that's just a quick look at that. And let me be cognizant of our time here because I want to try to get us in and out, pretty quickly. So anyway, start off, but congratulations to you guys. Good work on that. Bitcoin was a big name. Bitcoin, up 35,000 or something, or about 35,000 last time I checked. Yeah, so Bitcoin has been the star of the fourth quarter here, and it's basically a lot of financial firms are embracing Bitcoin. They're pumping it up, and the interesting thing is because I was invited to this Grayscale Bitcoin and Barron's thing, and I actually, I didn't pay attention to half of it because I was in the middle of doing something else with the kids. But it was interesting to see how they're trying to embrace Bitcoin right here. And Bitcoin is super expensive. But to me, as I mentioned to, my crypto guys back in the past, the risk that you have with the whole crypto situation is government. You got to understand government will not allow this thing to break down their structure. They must always maintain control. That's the way governments work. If you're a student of history, then you would know it. So that is the risk in the whole Bitcoin situation. It's supposed to be the people's money, and I'm all with that. But you got to be living in fantasy land if you don't think the government will not put, the clamp down on Bitcoin. They're already talking about digital currencies, which was a lot of speculation about it before. Didn't even know, but now, I mean, it's coming into fruition where central banks, governments are, forming their own digital currencies, and they have the power, to basically enforce people to use that currency, and they have the power to ban Bitcoin. That's the power that Bitcoin does not have, the government has. So you got to understand that. So just wanted to, touch that because that's it's been in the news a lot. A lot of people talking about it all day and night, going crazy over it. For me, okay, gold is real money. You guys can see this right here. Okay, you can see the article. Boom, we've been posted out. I've been trying to educate you guys, getting you to understand a lot of these concepts that a lot of trading groups don't teach. They just teach you how to trade, which is good. But there are a lot of things, a lot of moving parts that make this whole thing move. And the more the more you should be able to grow. So that's the purpose of me trying to teach you guys as much as I possibly can. So Bitcoin is digital. For me, before even my training in economics, it still never made any sense to me for me to put all my money and life savings into something digital because, it's on the internet, EMP block out that I can't access my money. It's just too risky for me. I need that hard asset. So for me, gold is, that's going to be here forever. We looked at Ray Dalio's framework was a couple months back, and he was posting, his framework over 500 years. And what was apparent is that countries, they go from a hard asset and then they go to paper asset. And then the system collapses and they go back to gold. And it's like a cycle. Every time they have to go back to gold. So what you're going to be hearing a lot for this year is, a lot of the gold bugs are going to be arguing that case because that's just, if history is our teacher, we know that that's always the case. It doesn't mean that that's what the future is going to be. Now, Bitcoin, on the other hand, is supposed to be like digital gold because it's, limited and stuff like that, limited in quantity. But it is not gold. It doesn't have the usability. You don't need a Bitcoin. You don't need a digital currency. Money's already digital. I haven't seen cash in I don't know how many years since Samsung Pay came out. I'm just every spot, with the phone, just like bloop, bloop, You know, I've been on the whole Chinese thing, how they are over there years, right? And a lot of people still not on it, you know, today. So you actually, there's no real need for it, you know, but gold, silver, hard assets is always going to be a need for it. They will always be around. So no, I don't want to, you know, throw dirt on Bitcoin's name or nothing like that, because there's money to be made, you know. So if you're going to make money in it, cool. That's why I even embrace the crypto group that we have here, because that's what people are into. That's what y'all want to know. Then, hey, let's get to it. You feel me? So it's whatever you guys want to do. We got our own platform, so we can do whatever you want to do. If you're interested in that, bingo, join the crypto gang. Got some great information in there so you can learn more about the crypto situation. But just understand, you know, the risks, the rewards and the risks. When you're looking at it, get in, get your money, get out. Don't be, you know, somebody who's just, oh, I'm just so hopeful and just living all, you know, blissful about it. Because government will do what they do. They've done it before, and they'll do it again. They will do it again if Bitcoin becomes a problem. They haven't said nothing about it because Bitcoin is not a problem yet. It's still not big enough. It's still small. It's not a problem yet. So once the government roll out their digital dollar, yeah, you can hang that up. XRP was the other one, the Ripple one that everybody was talking about, who they just got the clamp down in the crypto space, where you know, a major lawsuit is on there, and a lot of these brokers who are offering it, they're not even offering it no more. They're basically banning it because of the situation with that company. So, and that's interesting, because if they could do it to that one, they can do it to any other one. So anyway, just keep your eyes open on that. You hear a lot of news about it. And then also, let me just make this point here. Let me try to be quick about it. See, gold, you got to understand, it's real. It's real money, hard asset, right? It's never going anywhere. They're always going to have it. But investors, Wall Street does not like to hold gold. They don't like to buy gold. They feel like it's an expensive asset to carry because of storage. You got bars of gold. You got to pay somebody to, you know, for security and all this other stuff to keep it safe and secure. And it doesn't pay interest, right? So you get into understanding, you know, investments, gold doesn't pay interest, right? However, it is a hedge against, you know, the government printing money, all right? Because inflation being created, gold is the protection for that. So you definitely want to have some gold as protection, but Wall Street money needs, you know, other assets. And so with the government printing all this money, or, you know, well, yeah, I guess they just did the $600 payment things. I don't know if that's rolling. I think it's rolling out now. The $600 payment thing. This is money coming into the system. Everybody knows that's not enough. That means they're going to have to put more out. As they put more out, it's going to depreciate, you know, the dollar. So it's a lot of risk in the dollar on that. But instead of, you know, smart money going into gold, you've been having smart money being dumb and just going into Bitcoin. So you're seeing that it's called risk on. So they're in a risk on mode at a time that, you know, you're in a risky environment. But because there's no interest rates in bonds, it's okay. We don't have no other choice. We're not going to go, you know, you can't make no money off of the safe bet. That's why we're just looking at the financials, how bad they were doing. Because when banks, they make money, insurance companies, when they make money, they actually invest that money into bonds, and they basically get the free money, the interest. But if interest rates at zero, they're not making any money. They're actually going to be negative because of inflation. And so they have to actually get those, you know, they have to shift that money somewhere. And so they'll rather actually put it into something like a Bitcoin versus putting it in gold. And because Bitcoin is changing hands crazy, you know, people will be, you know, willing to get rid of that. When people buy gold, people ain't buying gold to get rid of it. You know, you buying and holding that. You building generational wealth on that, you know what I'm saying? So I just want to make that point on that. All right, cool. Unemployment numbers came out, 787,000, which was a decrease from the previous revised levels of 806,000. We can see that right here on the chart. There's no need to even go into it. Same scenario. We have record levels of unemployment that is continuing. I think we're going to continue to see this in 2021. This is really interesting because while the market is making new highs, the economy itself is suffering. But this is all part of the whole plan, the government to hijack the economy. So this is basically what's happening is that, you know, they're basically hijacking the economy, but people are going to ask for the government to do so. So it's not like, oh, we're just going to just take over. It's like, yeah, let's go vote. You know, you got your representatives and they're going to actually say, hey, we're going to do what's best for the people. Okay. So that's all you're seeing with that. 2021, we're going to get closer to that. So what else we got here? All right. So there's more charts on that. And this is my dashboard from a cockpit, what I'm looking at on a daily basis. I'll show you guys that in a second. All right. Video. Okay. This is article research analysis that was done on, the real estate investment trust. Trouble brewing, add another item to the list of first for 2020. Market saw 2 REITs declare bankruptcy on the same day for the first time. So they're calling for these REITs bankruptcy. This was like an insert from my machine, and this is something that they talk about on Wall Street. Part of the analysis on that. Another one is here. Okay, this one here says warranted optimism, sentiment versus supply chains. Executives have become increasingly positive in their statements in the most recent earnings conference call season. So it's saying that the executives are being more positive. The improving sentiment can be confirmed by observing changes in supply chain. So they're observing, this observation is the supply chain sentiment and then, what they're basically ordering, how they're ordering. And you can see consumer discretionary, which we just saw, that was one of the top performing sectors. The sentiment is here. And then this is the shipment growth rate. Bingo, right? Amazon booming. Okay. So Amazon is like the biggest one in this sector. Industrials also, you saw that in here. So this is again on the website. You guys can check it out. Again, the website, I'm trying to deliver a lot of stuff that you guys can do research on. So you can form your analysis and do further work. So you got to be doing homework. Amazon.com agreed to buy West Hollywood based podcast company Wondery. All right. So Amazon getting into the podcast business. They already have Amazon Music, and so I don't know what they're going to do with that. Maybe, they'll do something, but you got Spotify that's coming up. But Amazon, they just, when they go, man, they just take over. So that was interesting. Anyway, you can read more of that. You click on the little link down here. And so fundamental analysis of the S&P 500. Okay, so this is the fundamentals here. I know we haven't talked much about fundamentals, but you know what? I was seeing somebody was posting about fundamentals, and somebody was talking about it. And so I'll show you guys a little bit of that here in a second. Golden Eagle Coin, this link right here is a link to a company that I order from. I like them as well. I got a couple of people that I order from, or gold and silver. So if you guys into the gold and silver stuff, there's a link here. It is in the gold and silver group. Check them out. Okay, China Mobile, China Telecom, and China Unicom to have U.S. trading suspended as soon as January 7, 2021. So this week, these 3 companies will be suspended, on Trump's order to delist China. And so that's interesting because you see a tension brewing with U.S. and China. Now, there are people that believe that the tension will die down. For the most part, I think it'll die down if Biden takes over and Trump is not in office. Now, if Trump flips this thing miraculously, which I don't know if he can or he will, but if he does, then risk is, going to be crazy. All right. So anyway, you already see these 3 big boys they're getting delisted this week. You'll see more of that. Speaking of the politics, we got the runoff elections for 2 U.S. Senate seats in Georgia next Tuesday. Had the potential to inject volatility into a high-flying stock market that has mostly looked past political turbulence in Washington this year. It has, but I think to start off the year, the politics is going to move the markets. So market participants say any complacency among investors could be misplaced. So if you're complacent, okay, you've been too comfortable. Since if the Democrats win both Senate seats, then the incoming administration of President-elect Joe Biden will have control of both chambers of Congress and may move to reverse the corporate tax cuts of 2017, putting company earnings and stock prices under some pressure. Remember I tell you guys earlier, what was the guy named? Scaramucci, whatever his name was, Anthony. He was talking about this, and I was like, that's an interesting point of view. You have some Republicans that didn't mind Trump being not in office, and they would stand behind a President Biden because they didn't have any fear of taxes going up on them because they're counting on the Senate maintaining Congress. And, the Senate, they're going to block everything, Biden does anyway. So he's not going to get as much done as he want to get done. And so they were, basically sacrifice Trump, keep the Senate, and we still good. And we'll still get, we'll make money because, there's stuff that he's going to be passing. So you have those back door deals is happening. Well, that will happen that they're anticipating on. And this is before the election. So I saw that clearly. And I was like, okay, so they were basically saying that Biden's tax plans are high, but nobody's going to pay it. All right. So that's the whole thing. If you actually look back in history and look at these taxes, a lot of these companies don't pay the taxes. A lot of, wealthy people don't actually even pay the taxes. They have so many loopholes to get around it. Although the tax rate will be high, doesn't mean that they're actually going to pay it. The government actually never really, build up enough money to take care of its spending. So it has to borrow so much. So anyway, I think that's all relevant coming into this year because those tax cuts afforded these corporations, bigger profits at the end of the day. Because they didn't have those expenses to give to the government. And so, and we looked at Dalio's framework about, the debt cycles and stuff like that. He's talking about this whole pandemic and that somebody has to pay. Because you got to understand, I think pretty much everybody's under the consensus that, the rich is going to have to pay. Whoever's, at the top, you're going to have to pay because nobody wants to feel the pain. And so the government is going to do whatever they feel is going to stop the pain, but somebody's going to have to pay up. And so that's going to be these corporations some way, some form of fashion. Taxes are going to have to go up. So I find all of that very interesting. And it also, you saw down here, I think they were saying that the markets is betting that the Republicans will keep it, but they got some other information that's saying that, it's close and the Democrats could actually take it. So that's interesting. And actually, speaking of that, I'm actually in the middle of, move my pen out of here, in the middle of this book here about the Great Reset. Okay, you guys can check that out. All right, Klaus Schwab, I call him Santa Claus. But yeah, the Great Reset, this is the guy who runs the World Economic Forum, the meeting that they have every year with all the world elites. They go meet with this guy, German, super intelligent guy, doctor degrees in economics and all kind of stuff, right? Technology and stuff. This guy, super smart. But this book I've been actually reading and I haven't finished it yet. But it's interesting because you can kind of see the, what's the plot? It's kind of like a movie plot. Okay. And so this is interesting because he's describing so many things. And the thing that I find interesting is that because I've been hearing on the news, a lot of people are saying that it's going to be another pandemic. And it's like, how are they so confident that it's going to be another pandemic? What is it that they know? What is it, or unless they're planning it, I don't really know. But they're, already talking about another pandemic and blah, blah, blah. But anyway, this guy really goes in and talking about basically how the government is going to expand and expand and expand. And it's basically going to hijack the economy. People are going to be on universal basic income. And he's talking about a more collective environment that they're trying to create. Lots of bashing. He does a hit job on, capitalism and individualism, which is the basics of basically capitalism is, individuals pursuing their own needs. But based off of us pursuing our own desires, the economy has this natural way of working itself out and having an equilibrium or disequilibrium, as Mises call it. Disequilibrium is actually normal. It keeps things balanced, actually, which is weird. But that's the way it works. But these socialist guys, they call for collectivism, where you have to put the group's interest before yours. You have to make sacrifices of your own things for the good of everyone else. It just sounds noble. But in reality, when you do the analysis, those things never work. And so anyway, he's talking about that, and they're pushing it all through technology, and the COVID lockdowns and everything is actually making everything move. What they call it, warp speed. They got Operation Warp Speed out. So because of the lockdowns, people give away their freedom, and the government is actually moving really, really fast to try to bring these things into fruition that he's talking about in this book here. And so anyway, really interesting stuff. I, give you guys more on this. But as you guys know, last year I took the time to learn Austrian economics, and Ludwig von Mises, who's pretty much like the Jesus Christ of it, he's been talking about this stuff since, the early 1900s, before 1920. That these guys here, and this guy's, he's like in his 80s. So he's been around a while, and he's been trying to do this stuff for a long time. Never been able to do so, but because of the whole pandemic, they're able to kind of usher these things in. And so the problem that we have now is that the normal economy, we call it the free market, it is distorted. So entrepreneurs don't know what to do. They're trying to figure it out, and it causes a lot of chaos. So you can kind of pretty much throw away any statistics. You could throw away any quants, all this other stuff, predicting. That stuff is basically garbage as of right now, because you're dealing with human emotions, you're dealing with human logic, you're dealing with humans. And so we're all trying to figure out how we're all going to, behave. Will people obey the law? Will people fight back the law? Will people wear the mask, not wear the mask? Will people settle for lockdowns? We're trying to figure all those things out. And these guys, they know it. But because technology gives them more insight into your psyche, your brain, they never had this back in the day, this type of technology. They can see what people want, like, and stuff like that. But Mises already did his reputation on it. He was saying even if they had all the computers in the world, they could never figure it out. So basically, you got to understand what socialism, capitalism, the whole debate is going to be continuing to go. It's going to be stronger and stronger, because the socialists are going to be fighting to prove their point that they feel like the government has a better job at, having an efficient economy and raising the living standards of everybody, versus letting the free market does it. They're going to demonize the free market, the capitalists, for doing so. And there is a thin line between it. I'm going to show you guys this real quick. Okay. There's a thin line between the two. Let's just actually write it right over here. If you say a spectrum, socialist, capitalism, and then we'll put an I here, and that I is going to represent interventionism. Okay. So interventionism is the government coming in and intervening in the free markets. Okay. So this is the free markets over here. All right. And this is, government complete control. So we are in the middle with this intervention. We're taking a little bit from here. Okay. So the government said, hey, we can take a little bit of the free markets, let them do some of the things, and then let us do some of the things. But basically what happens is this presence in the game, as it intervenes, it creates disturbances, and it ends up expanding itself more and more on this side until it gets to socialism, basically. So basically that's where we're headed to. Okay. So it's not full blown, it's a spectrum. You got to understand where it's just migrating more and more here. Universal basic income will be ushered in, because 800,000 people filing for unemployment every week. We can't let these people go hungry and stuff like that. We got to give them $600. Trump said, no, they need $2,000. Andrew Yang says, pay people $1,000, $2,000 a month. And, people are rallying for him to, I guess, be a mayor or something like that in New York. And when I did my data science class, they was talking about this, before the elections, that, with technology and all this other stuff. But see, technology itself couldn't naturally do anything like that. It takes for the government to intervene, to lock things down, to destroy businesses in order for that to happen. And then they come back in as that they're the savior of the situation when they cause the whole situation. So anyway, that's what makes the statistics garbage. You could throw it all away. We have so much analysis, and we're actually so dependent on numbers, and we don't actually even understand the numbers. So people oftentimes say the numbers don't lie. Well, it's not that the numbers don't lie. It's our interpretation of the numbers themselves. We have to get to the causality of those numbers. Some people don't care about the causality. They just say, hey, the numbers are what the numbers are. So anyway, that's what we're actually looking at. And I believe in these next, 4 years, we're going to a greater welfare state, a state of dependency. We have businesses that are dependent on the government now. They can't sustain themselves. So they say, hey, government, give us bailouts. You got people that can't sustain themselves. You got food lines, food banks, people can't feed themselves. Over 40 million people on food stamps. Over 21 million people just unemployed. This is a disaster. And so how do you deal with it? It's a tough thing to do, I must say. So do we feel the pain now so we can have a greater future, or do we delay the pain now? Because nobody ever wants to feel pain in the first place. Delay the pain now and deal with worse pain in the future. I mean, that's basically what happens. That's why, this recession is an outcome of the last recession under Obama. And actually, the recession that we had was the fastest recovery in history. It just recovered in a couple of months after the crash. We'll look at the charts on that. But they managed to blow the bubble back up, which, one of the things I asked you guys, even on the Facebook side, in 2020, what was one of the things that you learned, right? And nobody really responded. But you have to think, you don't have to actually respond to the post, but you need to be thinking, like, what did I learn in 2020? Because the environment is changing. We can go over so many stock trading books. I got a crazy library. I give away books every year. But a lot of the stuff in those books get outdated because the market is like a natural organism. It's moving and it's, evolving. And so you have to get with the times. So, no problem, Justin. I'll just, just throwing it out here because I want to hear from you guys too. And Wall Street Jackboyz, you got to understand this is community building. I'm not trying to do nothing like nobody else out there. Any other trading guru, don't compare me to them. A lot of those guys are just salesmen. I want to build community. I want you guys to be smart. I want you guys to be better than me. And I want us to be able to work together so that we can actually find our edge in the market, find insights in the markets and things like that. So the website itself is a huge resource for research and things like that. So definitely get in the habit of using it. But anyway, I just wanted to cover some of that for you guys of what I am seeing from what I've learned from economics and how it works and what we're seeing in the natural market and the world leaders, guys like, Klaus here, Klaus, this guy, Great Reset. They're basically the whole thing is, green energy, technology, and a fair society. Talk about gender and all these other social things, and they sound noble. So the thing is that you ever heard of saying that the road to hell was paved with good intentions? Well, that's actually what really happens. If you saw the movie, what was the last Avengers movie, right? With Thanos, right? You know that Thanos, so I love that movie because I like how they complicate the characters and make them more human-like. Well, Thanos basically destroyed half of humanity out of, what he thought would save humanity, right? He sacrificed his daughter. He's like, nobody else is willing to make this, so I'm going to do it. But he's the bad guy in the movie. He's the antagonist. He's the bad guy. But in his mind, he's not the bad guy. He's the savior. He's trying to give humanity a chance in the future because resources are limited and we've overpopulated and we're going to all die if we don't cut back population. That's what the Avengers movie was about. If you haven't seen it, check it out. So, these guys, they have these good intentions. And what Ludwig von Mises says is that they have not done economic analysis. And so we have to look at how does it actually play out in the real world? If we take from someone to give to someone else, how does that impact people, right? So we have to actually understand how those things work, right? Is there a better way? Okay, so those are the things that we're looking at. Another book, I'm always giving you guys some stuff. My man, F.A. Hayek, Nobel Prize winner, Nobel economist. He actually was a student under Ludwig von Mises. They gave him the Nobel Prize right after Mises died because Mises was hardcore. He didn't play with them. And F.A. Hayek, he entertained him a little bit. So if you guys study like Walter Williams, the economist that we talked about, the black guy who's one of the best economists to ever live, who just passed away, he studied under Hayek as well. So all these guys are from the Austrian School of Economics. But he talks about this too. He talks about how if you give the government an inch, they'll take a whole mile from you. And when you ask for your inch back, you'll never get it back. So you have to be careful about giving the government these freedoms, like the Patriot Act. If you got a video camera, smartphone, Xbox, any kind of console with cameras, anything smart, government has access to it. They tap into it. So therefore you sacrifice your privacy. But in return for some kind of benefit, most people don't really care. It's like, I get to play my game, I get to talk on my phone. I don't care if they could just tap into it, blah, blah, blah. So it's sneaky. It's really, really sneaky. Most people not concerned with these things, but I try to help you guys to understand it if I can. So that's basically what we're seeing here. And it's going to happen more and more as the government take. In fact, did you guys see the movie Wonder Woman, the new Wonder Woman movie? I saw it. It sucked. All right. Suck. The movie sucked. Okay. I give it maybe a 4 out of 10. It was really cheesy. But it was a really important lesson. When I thought about it, I was really upset about how terrible the movie was. But at the end, I was like, it was a good lesson in that movie And they could have actually delivered a much, much better movie based off of the premises. And so I'm not going to tell you guys the whole movie, but basically, because this is a part of the lesson that I'm going to teach you guys here, is that the guy basically became a genie, basically. I'm not going to tell you the movie because I don't want to throw you over. Let's say he basically became a genie. He can grant any wish to anybody. Whatever you want, he can give it to you. And so people were just making wishes. And so when people were, I want this, that, and the third, he'd give it to them, right? But then what he does is he takes something from you that you never even negotiated. He just tell you what he going to take from you. He's like, he went to the president. He's like, you want to deal with these countries? Boom, boom, boom. And I'm going to take this from you. And the president was like, okay, you're going to give me what I want because people don't. I'm going to get what I want. So I guess you can take what you want. Somebody always says, don't do a deal with the devil because he'll always take 10 times more than what he gave you. So the government works the same way. You got to understand that this is how these things work. All the money printing and stuff like that, it comes to us. You have to do you gotta pass through your economic lenses on these things, right? And when you pass through the lenses, you'll see that, okay, what happens when you tax the rich or the corporation, the guys who are building, who's producing jobs and stuff like that? Well, what happens is you start to see them shifting going to other places, right? It causes a chain reaction. And that's what people who are fighting for all these justices, they don't see that. It's not that they're evil or nothing like that, because I think it's more complicated. It's just that people want what they want. They want the ends, but they don't understand the means that they're trying to take to get to those ends has consequences that they have not calculated. And you take a look at all these companies like Tesla and it's a couple of Oracle, all these guys moved from California to Texas, right? They're already getting the hell out the way, okay? Those rules and regulations are crazy. I had a customer in California. This guy had a speeding ticket for riding his bicycle. I just thought he was joking, And the crazy thing is, how in the hell do you get somebody a speeding ticket for riding on a bike? I mean, this is literally on the guy's record. It was crazy. So you got, when you have these regulations and rules for whatever the reason, whatever the intent is, you have a consequence of that. And so you have all these guys, they start to move away. And then, so you have to deal with that kind of stuff. Or if they can't get away from it in that kind of way, then what they would do, corporations will cut expenses. They will replace workers with robotics or outsourcing the jobs to other countries and things like that. So somebody was asking about China and, socialism, communism, and capitalism. So you got to understand, I just showed you guys there on the chart, socialism and capitalism is a spectrum. And America, we're not full capitalist. We're a mixed economy. And so you got to understand that it's a spectrum, but we're moving more towards the socialist spectrum. So we're going more in that way. But the more free an economy is, the greater the economy is, the greater the outcome of individuals pursuing their own purposes. It has a great impact on raising the standards of living for everyone. And history has shown us in socialism, it's never actually done that. So you got to understand that when somebody's talking about China, because we got this whole situation with China, and China's growing, Milton Friedman, he did a docuseries called Free to Choose. If you guys can go check out Free to Choose on Amazon, or it's probably even on YouTube, but it's a docuseries. And this guy, he's a free market economist as well, probably the most famous one, probably Milton Friedman. A lot of you guys probably know his work. So Thomas Sowell, the other black economist, he studied under Milton Friedman, his student, his direct student, actually. So a lot of people know Thomas Sowell. Well, Thomas Sowell was trained by Milton Friedman, Dr. Milton Friedman. Anyway, this docuseries is really, really great because what he did is he went in the real world to show people how things really work. And then he goes back at the end of each series and he bring in experts, world leaders, federal bank reserves, treasury guys, CEOs of companies, and he bring them all into a place and they debate at the end. So it's called Free to Choose. Check it out. So he shows you the theory, put the work in the real world. At the end of the series, at the end of each video, he goes and debate. He bring people that opposes his views, people that agree. Doesn't matter. They bring it all to the table and they actually debate what the content of the film. And you will learn a whole lot of how things really work. Also, one of my socialist friends actually put me on a video called geez, what is it called? It's a book by Ayn Rand, Rand. If you go, Senator Rand Paul, his father Ron Paul is a free market economist. I guess he named his son Rand, and that's after Ayn Rand, who libertarian free marketer, female. She's kind of like the Ludwig von Mises of the libertarians, I guess, from back in the day. But anyways, this book, and they made a movie series, a trilogy, 3 movies. You guys should definitely watch it. It is interesting. It moves like a movie, but all the economic lessons that you need is in there. But it kind of, it's something that you can enjoy. It's not so nerdy, okay? But it's a movie. So I'll share a link with you guys on that once I can find it here. But that'll teach you a lot about how all this stuff works. And then you'll start to understand where we're headed. So it's hard for me to actually show you if you don't understand these things. Some of the basics I teach you guys in the time in the markets class, so you guys understand how the bond markets and all this stuff works. But the time in the markets class teach you guys all of that. That's like your basics on economics from the time in the markets class, which is free once you get the options trading master class. So anyway, I will show you guys this here. This is an analysis on gold. Okay. And we saw my fundamentals here just a second ago. But I want you guys to just take a look at this report here. This report here, let me get my thing. Okay, here we go. So this is talking about Barrick Gold. Okay, that's the stock ticker gold. And these analysts, they put a buy valuation on this. Say, hey, this is a good buy. They tell you why. The PE ratio indicates a discount compared to an average of 23.01. So they're saying that this stock is the fundamentals off the chain and it's trading under, the valuation. So that means that it's at a discount, basically. So I highlighted these. These are on the website. You can see, where it's at. Its PE ratio lower than its peers, much lower. So you're getting a good deal. You're getting a good discount. All right. So anyway, this is on the website, so you guys can check it out. And I know you're like, oh, this is a whole lot. Like looking at charts and technical analysis is a lot easier. It is. But I just want to speak on this one video somebody was showing me about a guy who was showing people about a free cash flow model, and it looks great. I was telling you guys earlier about how the statistics, whatever statistics we have out there right now, are pretty much bullshit. That's why we didn't get a lot of companies to provide guidance, because that's how, when we build models as a modeling analyst, financial modeling analyst, we have to make assumptions in the models. We have to input assumptions. I mean, these are guesses. We have to put these in the models to drive numbers in the future. This is how we make the forecasting. And where do we get those assumptions? We normally get it from the company itself and their earnings. They speak about, their forecast, and from their internal, guys who put it together, or where they see the company going. That's why we have the earnings expectation. You guys know they say what earnings should be if the company miss, or if they hit or miss. Well, that's where it all comes from. But it still comes from assumptions from internal. But a lot of these companies, they stop providing guidance after the pandemic lockdown stuff, because it's too distorted. Like things are just chaotic right now, and the entrepreneurs are trying to have to figure it out. They got to navigate through the roadblocks of the government, the lockdowns, and all this other stuff. It is crazy, So anyway, that this thing here is that, and I wanted to show you guys, because I know some people was looking at it and was like, okay, so this is the number, so that's what it's going to be. So then you'll start to try to make decisions, and you think that this is the Holy Grail. Well, there is no Holy Grail. This thing is very complicated. The markets, that what I'm talking about, is very complicated. So there's no Holy Grail. So don't subscribe to any Holy Grails. But we take as much information as we can, and we have to make our decisions. And so the economizing man, you guys, us, we're making decisions with limited information. The limited information that we have, and that is the risk, because we don't know it all. So there is always a possibility that you could be wrong. Your models could be wrong. Models are wrong all the time. So I know that people were like, wooed and wowed by, the model, and there's no explanation of the model. It was just showing you the outcome of the model. And people were like, oh, I want to do this, that, and the third. But understand, these things take a very long time to put together. Let me show you guys this. This is an easy one here. Okay. So if you take a look at, okay, I'll just show you guys. Let me just show you something real quick. This is like a easy. This is the type of stuff that they have access to on Wall Street to make everything easy. But you still need to learn the basics. But trying to build something like this, average people can't build stuff like this. You don't even understand it. All right. So it's a lot of numbers and things that's on the board. Okay. And I think in the video, he did not show any of this stuff. He just showed the outcome. Right. But this is the companies, the financials here. Okay. And in the green, that's the historical information. Over here is the forecasting. So we had to take these numbers, drive it by a number, which would be like down here, and get these numbers at the top of it. Anyway, I want to get you guys lost into it, but this is how we come up with it. So I mean, it's a guess, but it's a good guess. It's a mathematical guess, but it doesn't mean that reality will shape up to these analysis. So, but anyway, you can take a look at these type of models, and then it'll output. It'll tell you what the current price of the stock is, and then it'll tell you its implied value, its intrinsic value, basically. And it'll tell you that it's trading at a discount, 47% discount. So if it's at $3,200, stock is actually worth $4,700 according to this 5-year, 5-year forecast. So we're going in the future. It's called future cash flow, discount cash flow analysis, basically. So we're going into the future, and then we discount it back to the day, and then we get the price. And that's what tells us this. So a lot of companies, research companies, hedge funds, whatever, they use this stuff to basically find good buy zones. Okay, you get a buy trigger or you get a sell trigger. And once you get that trigger, you sell out. So say, oh, this is trading at 3,200. All right, but it's worth 4,700, 4,790. So if we buy here and say if the stock does go up and it's this, okay, we exit out. We're just using that, So anyway, I just want to show you guys that these things, it's a lot of work that goes into it. Okay. As you can see, it's a lot of numbers. Stuff is very boring. That's why a lot of people don't really get into the fundamentals. But a lot of people skip this kind of process and just depend on the analysis of other great research firms who've already done this work for you, like Investor Business Daily, the IBD 50. So they got an IBD 50 list. All solid, good stocks. You don't have to go through, burning brain cells with this. But however, if you do know this, then, great. Hopefully it could benefit you. But anyway, I just, want to show you guys this so you don't get caught up in any traps of somebody has a holy grail. Warren Buffett himself lost a shitload of money, and he's the oracle. Okay. So we're talking about irrational markets, okay, that are behaving, based off of the incentives of the government, with cheap interest rates or manipulated interest rates, stuff like that. And so anyway, you have people that's pumping money into Bitcoin and Tesla, and Tesla used to be the short of the freaking past, 3 years. And then this year, last year, people got wrecked. You couldn't continue to short Tesla the way you were in previous years. Speculation became crazy. IPOs, the bubbles in IPOs are crazy. Anyway, I think that this year is shaping up like the 2000 .com bubble. We're seeing bubble-licious on top of bubbles here. And the difference is that the feds don't have any interest rates to cut anymore. Okay. And so it's amazing to me that people are still living the way they live. The question is, how will people behave once the government starts to spit out this money? Will people go out and spend money, or will people save the money? This is a big issue that economists have been debating for a while, trying to figure out if the people will spend the money. You got to understand the government needs for you to spend money. It is a mental game. If you go out and spend the money, okay, the economy will grow, because when you spend, that's somebody else's income. So some business person will make money off of you spending money. So they got to have that exchange going. So they're giving you money, not for you to be saving and stacking your chips. They're giving you the money so you can go out and spend it. Okay. And they're going to give you more so you can keep on spending if they don't see it being spent. They don't see it being spent, they're going to find ways. So I was listening to Mark Cuban. I was telling somebody was was talking about this before, and I was telling them how Mark Cuban made his proposal at the beginning of the year, and I remembered it clearly. And he was saying how the stimulus stuff isn't going to work. They need to find a way to coerce people into spending the money by they're basically talking about having people having direct accounts with the central banks. This is all against the Constitution now. So, and that's other things that we're looking at is we're seeing the government break so many rules of the Constitution. It is crazy right now, and it's just happening. So when people get connected directly to an account, they may give you a debit card, some kind of card or something like that, and you'll get stimulus directly on this card. Okay. And what Mark Cuban says is that you give people a timeline, a deadline that they have to spend the money by. And if they don't spend the money, then they forfeit the money. You take the money back. Okay. Remember I told you, you don't do deals with the devil. Okay. Because he's going to collect times 10. All right. So basically, this is to incentivize you to go out and spend money in the market. This is, a proposal that they've been talking about for a while. And I just posted on my Facebook page about Maxine Waters. She did a bill. She, I guess, proposed a bill that actually talks about the digital dollar and, talking about the whole situation that I was just describing. It's in the bill. And it's funny because Mark Cuban was talking about it. That's the guy from Shark Tank who owned the Dallas Mavericks. If you guys don't know Mark Cuban, smart guy, but some things I disagree with him on. But smart guy, good businessman at the same time. So, but this is a proposal that he has. Government people are listening to him. And so you got to get people spending money. Now, what happens if you get your money, your $600, $2,000, whatever it's going to be, and you save your money? Okay, that is not going to get the government what they want. Remember, the feds are chasing a 2% interest rate, inflation rate target. They're trying to create inflation. They want the cost of living to go up, basically, and they're not seeing it. And so they're going to pump as much money in there until they see it. And so this is why I'm still long on gold. And I think that stocks will continue to rise. I do believe that there will be another crash. I just don't know when, because the government is further continuing the negligence that were in the market before. It is crazy. So it's going to be interesting to see how they try to weave themselves out of this situation or try to steer the economy to prevent the pain. A lot of people want to be optimistic. And so it could possibly happen, but I'm just not too sure how it will unfold. I believe that they're going to destroy the dollar. So we saw the dollar actually being murdered this year, which is crazy. But risk is going to continue to go on. Nobody's playing safe right now. It's no incentive. See, the interest rate, the yield, is a reward. That is the incentive for the investor. Okay, these are natural things in the market. So, anyway, I'll talk you guys' heads off about that. But let me just take a look at this real quick, because I know Wesley, he did want me to cover one stock for him as he made a request. But this is the ES right now. We've been seeing it chop up against the ceiling here, and like it's trying to break through. It's got a squeeze on it. Let's switch over to yellow. All right. So we have a squeeze right there, and we're in this overbought territory. We're up against this resistance. Can we squeeze through that, or will we get rejected? Right now, we're seeing a little weakness. It's not anything strong enough. The NASDAQ is only down by 50-something points, 56 points. So it's not bad right now. If you actually look at this, we go back on a bigger time frame, we can see that it's going up above this, but it is an overbought territory. So I think that this is overbought territory. This is where it's at, and it's up against resistance. When we see stuff like this, bingo, you get a drop. So it doesn't mean it's going to crash, but you do get a drop. All this optimism. We saw that same thing here. Bingo. That was a crazy correction. I wouldn't be surprised if we did get a crazy correction. But the question is, what would actually give us this kind of scenario? If Trump was, to break this whole thing, which I don't know how he can do it, if he's going to be able to do it, but if he does, you got to understand it's still a possibility. And that's going to be happening this week. So it's got a lot of risk in the market this week, I think on Wednesday. But if he somehow, finesses this thing, I think you'll get a crazy correction similar to what we saw back here, because the market is already moving forward with the anticipation that Biden is the winner. And so a lot of things are priced in according to that with these, electrical companies and stuff like that. So we'll see that. What else we got? Let's see. Take that off. All right, so that's the S&P 500. Let me actually just take a look at gold real quick. All right, so this is a weekly chart on gold. All right, gold came down to the 50. All right, came down here, boom. And now we've seen it shape up. It's in a squeeze. So I don't know if it's going to fire off. Well, it's definitely not going to fire off now, but will it just go straight up, or will it do something like a test back down to test your faith, and then do something like that, like an inverse head and shoulders? Again, this is a big time frame. This is a weekly chart. So either way, I'm still bullish on gold and silver, and it's because the Feds, as I just described to you guys, they will print money regardless. Doesn't matter. That's what they're going to do. All right. So let's take a look at the dollar real quick. All right. Look what got murdered. Okay. The dollar got murked. As you guys can clearly see, you do not want to be here. Okay. Now, I do have this floor here. So the question is, does the dollar hold? Okay. Now, remember, if you guys don't remember from the previous Game Plan Sundays, when a dollar goes down, what do stocks do? They do the inverse. They go up. Okay. So, because things are getting more pricier. Okay. So when the dollar goes up, okay, if it goes up, then we should see an inverse. All right. Where the stock market should come down. So pay attention to, positive days, negative days, and you'll see this correlation that I'm talking about. Sometimes they come uncorrelated, but that's what we typically see. But because this is a strong floor here, the question remains, does gold hold here? And gold is at, pretty much a low since a crazy ass low. This is what year is that? 2018. All right. So from 2018, it's way back there now. Question is, does it continue to plummet? Which I think that it will, because of the excess capital that they're going to be putting in the system. It depreciates the value of the dollar. And you got a lot of other currencies that's going to be betting against that as well. So anyway, that's for that. And I figured we'll entertain Bitcoin for a second. Okay. So Bitcoin has just been skip hopping, all kind of crazy stuff. Look at it. I mean, it's just no rhyme or reason for this, but it is what it is. Okay. So we came up, I guess from here, we saw it come right into this 423.6 extension. That's another Fibonacci level. And next thing I know, this weekend, it just ripped over all these levels. So this is straight up bubble. Okay, straight up bubble. If you're in it, then you definitely made some good money. But I would definitely say the time to cash out will be now. Cash out, get back in on the next pullback. If we were to treat this thing like how we would do stock. So, but that's that. Let's take a look at oil here for a second. I mean, we talked about the crash that happened with oil. The stock market situation came from oil. We see oil start to bounce back from this situation. It's coming up against this zone here, and it's pressing up. It has this resistance level up here. The question is, can we actually get up to that far and clear, or do we get rejected? Because it's overbought, looking like it's going to get rejected. Price of oil goes down. You have that's the deflationary pressure, basically. So the Feds will be more inclined to print more if it goes down. If this thing goes up, then they'll start to look at this inflation situation a little differently. But I don't really see that. In fact, I think there's a meeting scheduled with the OPEC. They're talking about making their producers output more oil, so the supply demand controls this stuff, right? So they're going to output more supply that'll dilute, basically the value of the oil should make it go down because they have much more in the system. But we'll see, because if they lock stuff down, they, start to destroy the supply chain stuff, and, things can get real crazy. And so that's what I have on that. Dustin wanted, not Dustin, but Wesley wanted to take a look at Micron. So let's take a look at this one here on a weekly chart. But on a daily chart, I do actually like Micron. This is actually looking pretty good here. And so we got about an $80 target on here. You can see that right there. We got a buy trigger that's right here. We have buy trigger here. You can see the momentum shifted coming upwards there. You got some volume right here. Event earnings coming up this week. So keep that in mind. But there's a squeeze in here as well. So this up candlestick, you know, again, I think we have a $80 target on it. So I do like it to the bull side. So that's just my take on it. Let me know how that turns out for you. What else we got here from you guys? Oh, great info, great split. Okay. CXL. Okay. It all dropped together for us to see a real dump. Okay. Liking the setup in the utility sector. Okay. Strong. All right. So, yeah, let me take a look at utilities, which I haven't had time to take a look at. Yeah, Ron, I like this here. Utilities. Again, this would be safety. Nobody wants to be buying bonds right now. You got to be out your mind to do that. But this would be the proxy for bonds. Okay. So we caught this signal here, breached the 100, hit this Fibonacci target I got right here perfectly, and it's bouncing back up as if it's trying to recover. So I think we can get back up. We have the squeeze in here, shifting the trend, momentum, things are shifting. So I do like that to the upside. This is going to be, again, more of a safety thing. So if we get any kind of risk, and you got to also pay attention to the VIX, right? And the VIX, yeah, the VIX be all right, but I can see us going up here with risk on. So if, you know, things get crazy, get dicey, and the only thing that I can see right now is this whole election stuff, right? This is a huge risk to the markets starting the year off. So if that takes place, you'll see more people start to buy this. If this starts to go up more, to me, that would be a little telltale there for that. Let me just look at the VIX real quick. And then you take a look at the VIX. It's been holding its ground up here. You can see that high. This level's down here. Bingo. It's been a little choppy, but it's still holding. And so the question is, does it hold and starts to form what looks like a double bottom that could be forming here? And then we get another, you know, crazy peak. That is a situation that could come into fruition, but I don't really know. We'll see. But we can see that it's, you know, pretty much oversold territory. It's squeezing again. It's right here at the same floor level zone. And so what we typically see is when it get out of bounds, it pops back up the other way. So a little cautious. I think, you know, we should be very observant this week, you know, not rushing to get into any kind of positions. Try to see how this thing starts to form out, especially with this whole election risk stuff that's happening. I think it's really, really crazy. You said XLF is strong. Jeff to play the XLF setup. Okay, let's see. XLF financials. All right. Yeah. Okay, cool. So this is a bullish setup as well. It is overbought, but it is still bullish nonetheless, and it has a squeeze on it. And so once it gets into the zone, it can continue to go higher. Previous highs are right here at the 31.8. So we can see it chase this target here about $31. You know, since it's so close, and this year, anytime we see anything this close, it comes into fruition where it goes to tag that next target. So we can possibly see that happen. So yeah, I do like that blue sky breakout while money's flowing into the sector. Right. Yeah. Okay. Yeah. Financials were not my friend last year. So I didn't do too well with financials last year. So I tend to stay away from them, but you guys continue to work it, and definitely let me know how that plays out. All right. Anything else you guys got for me before we bring it to a close? Definitely hope you guys like the video. Again, here go to calendar right here. If you're on the website, go to events. You can check out what events we have coming up. We got PMI numbers that's going to be coming out this week. All right. These are the events. I like to go to the monthly view. You can see some information is you can't see it all, but you'll be able to see. There we go. All right. PMI numbers. Okay. ADP numbers. The service numbers, the non-manufacturing, the service numbers will come out. And then Friday, we get the unemployment numbers. Okay. So all of this is right on your calendar so you guys know what's coming up. And even on the news feed, you know, you can see the events as they unfold on a daily basis. So get in the habit of showing up daily and you'll see the events right here on the side menu here. All right. Also, while you guys are doing research, okay, use the website when you're studying. If you're in a classroom or whatever, just go use that search button and you type some things in there. You'd be amazed at what may come out, right? Let's see. Maybe see if we can find something here. There we go. SPACs. Okay. Special purpose acquisition companies. If you hear terms and stuff like that while you're doing your research, you're not really too sure, well, you can use the website to actually go in and see what they're talking about. So you can go in and, you know, find what you're looking for, click on it, and there you go. So use the website. There's lots of things you can use it for. All right, gang. So it's been a longer session than what I desired for it to be, but had a lot to cover, and we'll continue. I'll see you guys next week. And tomorrow in the chat room, make sure you guys get right up here in the chat room. Okay. Right here in the chat room. Okay. Get up in there. All right. So anyway, you guys have a good one. Good night. Peace.